Hello, hello. This is Wayne Blau, and welcome. Hello and welcome to this week's Profit Maximizer Moment. This show is dedicated to helping business owners dramatically improve their bottom line with our weekly profit maximizing tips that you can use now to make more money. My head's gone. There we go. Let's adjust the camera. Losing some of my hair there, but I got too much of it anyways. I need a haircut. I'm your host and coach, Wayne Belisle. I'm also the founder of a local CPA firm that works with business owners to help them make more money and keep more of it from the IRS. Pretty simply, we try to help them make more, keep more. I do that with our profit coaching programs and with our tax planning systems, which has saved my clients over $6.8 million over the last 5 years, all legally. Love my clients, like I said, but I don't want to share a jail cell with them. In today's video, it's been a long week. In today's video, I'm going to talk about how smart business owners reduce their taxes. How do they pay less than you do? All right, let's talk about that. But first, today's show comes to you from Profit Maximizing Publisher, which published my book, The 90-Day Profit Reset, which shows you how to gain your independence from reduced cash flow, shrinking margins, and evaporating customer base. In this book, you'll find chapter after chapter, idea after idea about how you can turn around your business and reset your profits from red to black in 90 days or less. Even entrepreneurs who are making a lot of money can find things in here to help them make more money. We're going to talk today. Why I get this, my buddy, he owns the same business I do, makes the same money I do, and he pays less taxes. Why? Well, there's a lot of reasons why, and we're going to talk about them today. And one of the things, first of all, that we're going to go over is, I said business owners, but a lot of these are true. The things I'm going to cover are true for non-business owners. Okay. And, if you don't fix the problem and you're paying too much taxes, you're sending too much money to the IRS, more than you should. All right. And you're robbing the money that you could use to expand your business, fund your retirement, get your kids to college, have less debt, take that vacation you promised your wife. All right. All those things. So let's talk. How is it? I'm making a lot of noise here. Excuse me. Boy, we're having allergies. I can't wait for the first frost. We're in El Paso, Texas, so that may not happen for another 5 years. You never know. Okay, look, I've been doing this for over 40 plus years. Matter of fact, today, congratulate myself and my wife. It's our 43rd anniversary. So, and I started before then. So we're having a great time. Anyways, I don't know how she puts up with me this long. But that time frame, I've worked with business owners almost consistently, and other taxpayers, has taught me that some business owners legally pay less in taxes than other business owners who make the same amount in the same industries. I call these my smart business owners. Want to know what these guys do differently? Let's talk. First of all, most importantly, smart business owners take tax planning seriously. Why? Why should I take tax planning seriously? I mean, I hired a CPA to do my tax returns. They're going to do it for me, right? Tax planning, truthfully, that's a huge mistake. All right. I'm going to go over why in a minute, but tax planning is huge, totally one of the few things that I can guarantee a return on. Okay. That it's one of the few things any business owner is guaranteed to get a return on. You're guaranteed to pay less in taxes unless you had a loss in your business. Even then, I might be able to get some money back from taxes you owed in prior years. But if you've got a business and you're paying taxes, it's a rare thing indeed that I can't come up with some way to help you save money. What I commonly hear is, I'm too busy. I don't worry about tax planning. I hire a good CPA. Yeah, what did I tell you a minute ago? What they fail to understand is that there are considerably fewer things we can recommend after the tax year ends that will cut their tax bill. Yeah, it's like Cinderella at the ball. Once midnight on December 31st hits, her dress goes back to rags, horse goes back to mice, the fancy carriage comes back into a pumpkin. That's how it is with tax planning. Once it's January 1st, what happens in 2021 is history. All I can do at that point is report your income information correctly in a way that minimizes your tax and minimizes your risk of being audited. I don't have the number of arrows I have in my quiver to reduce your taxes is vastly reduced. Think I'm kidding about dollars? These are old examples, but they're similar. I had a manufacturing company reduce their taxable income by $591,000 to $230,000 and save themselves $125,000. Got a retail company cut their taxable income from $471,000 to $147,000, saved $108,000. Dentists reduced their taxable income from $299,000 to $234,000, pocketed $22,000 in income tax. Not as big, but you're gonna turn away $22,000? A consulting company cut their income tax from 1.3 million and some change to 857,000, saved over 277,000. Construction company lowered the taxable income by over 750,000 and saved 325,000. I have example over example over example. Now, some of these are, they're literally from probably 15,000 to 750,000. The sweet spot, most of them are going to run in between $40,000 and $80,000. But that's annual. That means they're saving 40 to 80,000. Let's just take the low end and say 50,000. If you do tax planning with me for 10 years, you've pocketed $500,000 legally. And that's what I'm serious about. Every single thing I do is legal and clearly outlined in the tax law. In the process that I go through, I literally have a program that I've licensed that a CPA tax attorney does. I put the client's information in, kind of generalized over the last few years. It pumps out its recommendations. I adjust it to what I know about the taxpayer and, move it and print that out. I have my articles that I update, this one and then the few others. And then I do a projection ahead of time. Then I sit down with the client and I also write down, I do a projection of what they would owe if they do nothing, which by itself is better. We're talking about in November, December, finding out what you're going to owe in March or even October. Yep, my bad. Forgot to turn the phone off while I'm at it. Let me make sure the other phone doesn't get through. Yeah, one of my bad things. I always forget to do that. Sorry about that. I hate when that happens. All right. But it's one of those things where in November, December, you're literally going to be able to cut your taxes because we can sit there and do it. Okay. And truthfully, I forgot where I was at. I apologize. What we'll do at that point is I sit down and I figure out what your taxes would be if you didn't do anything. And then we sit down and put a list of things I recommend. We meet with the client. We go one by one so they can see, so they understand it. That's why I like licensing that thing from that CPA tax attorney I said, because I refer back to that page, which is in simple English. But what I like down the left-hand side, it actually has the citations of where the law is, what the IRS regulations are, the IRS publications you want to see, landmines that you got to be careful about, tax saving tips. It's a nice little add-on. But the real thing is having us know your situation and adjust it and customize it to you. So why does tax planning work? Well, it works because it gives you the time to do things with your business that you can't do after year end. It's really just a matter of being proactive before the year is over rather than reactive and just dropping your stuff off at the tax preparer sometime in the spring. I already went over what we did pretty much and how we created it. Now, you should never make a decision. This is something I'm always working on. I don't want you making a decision 100% just on a tax strategy. It's never very good. Maybe that extra $40,000 would be better off spent on a marketing plan to bring in more business. Only you know for sure. That's why it's a customized plan, because it has to be based on what you're doing with your business. I don't want you to run out and buy a computer at $20,000 or whatever, $20,000 worth of computers or a new car that you don't need. Because people don't understand that's something that we educate them on. If you're spending $10,000, you're only saving probably $2,000, $2,500, maybe $4,000. You're not saving dollar for dollar. All right. Now, if you need those things, the tax savings is gravy. All right. And you've heard they're talking about trying to raise taxes. Excuse me. This is a good way to make sure that you offset that. All right. Especially in these changing times. Hasn't passed yet. I can't wait for them forever, so we're starting our tax planning. I delayed, thinking they might pass something, but they didn't. There's no one can tell you how much tax planning will save you in advance, but my experience is that you will reduce or save your taxes every time you do year-end tax planning. I have people that have been coming to me for 10 years, paying me to do it every year. They like me, I'm sure, but not enough to just hand me a check at Christmas time just because they like me, okay? It's because I'm saving them money. Second thing smart business owners do is they call their tax advisors before making major financial decisions. Look, I don't charge extra for a phone call. It's part of our fee. We're rearranging our fees, but it's part of our packages. Okay. Smart business owners always run things past their tax advisor first. Every CPA and tax preparer can tell you a story about a taxpayer who did something and just didn't seem to think it was important enough to ask about the tax consequences because they listened to their golf buddy or somebody. One of my favorites is a gentleman, nice guy, liked him. He's passed away since then, but still he was pretty good. He was 59 years and 4 months old. His golf buddy told him he could take money out of his IRA without penalty once he turned 59. So he took out $50,000. Of course, didn't bother to call me. Heck, what do I know about taxes? I'm just the CPA doing his return for the last 10 years, right? So when I did the tax return, I showed him the law. In order to avoid the penalty on the early withdrawal from a IRA, you got to be 59 and 6 months, not 4 months. So listening to his golf buddy cost him $5,000. All right. And another guy just took out $200,000 out of his 401k, thought the money they took out of, they took 20% or 10%, whatever. I think they only took 10%. He thought that was all the tax he owed rather than calling us up and let us do it. I have many other examples. Another guy sold a rental property, didn't take enough money down, but he was taxed on it. Now, luckily, we were able to get him, an installment sale and things like that. But still, he didn't realize he had to recapture depreciation. Third thing that smart business owners do is they have good accounting records. All right. If you don't have good accounting records, I can promise you that you're overpaying taxes. You're not recording all the cash that you spent. You're not recording all the deduction you got. Look, the IRS is getting better and better at tracking your income. They're getting 1099s, W-2s. Even if you've got a business that accepts credit cards, they're getting a 1099K. They get those. All right. The income is almost always going to show up. Expenses is up to you. IRS doesn't care if you deduct expenses. Right? I mean, I got somebody recently I can think of that didn't remember a 1099. They added $100,000. He figured since he lost money, he didn't have to show it on his return. Well, they got the K1s. They got the 1099s. Sent him a bill for $100,000. After we did the return, he actually had lost money. He got a $500 refund or owed $500, I forget. But getting that IRS notice saying you owe $100,000 plus penalties is not good for your day. All right. If you're not keeping track of items you paid for from your personal account, you're not thinking of the purchases you put on a credit card, you can't defend yourself if you're audited because you don't have the documentation to support your deductions. Without good accounting records, you're simply going to pay more in taxes than you're legally required to pay. And more importantly, you're going to pay me more. You're going to pay the tax person more. We don't do them anymore. If you bring boxes here, we send you to a bookkeeper, tell them to have them put it together and bring it back. All right. Next thing that smart business owners do, they get their records to their tax preparer early. If you plan to show up between April 1st and April 15th, don't bother, especially if you got a complicated return. You're better off waiting until May or June. You want your tax preparer to have time to prepare accurately. When we make a mistake on a return, and I tend to be tougher on what I call a mistake. It's not just putting something down wrong. It's not asking a follow-up question that we probably should have because we're professionals. We're supposed to know better, okay? I can almost 95% of the time it's happening 5 days before a deadline. So don't wait. Don't, get it. If you don't want an extension, get it to us by like March 15th. If you have an extension, don't wait until the last month before. We're crazy killing. I mean, we're seriously. We're going to do our best to make sure you pay no more than what's legally required, but we're going to minimize. Sorry about that. I was in the wrong place. A lot of times we're forced to make an estimate too if you bring it in late. Another thing smart business owners do is they save for their taxes as they earn income. If you know you're going to pay $30,000 to $40,000 every year, there's no good reason to wait until June to look for the cash. You're going to pay the taxes. It's just the nature of the beast. We're not saying we're going to eliminate your taxes. Unlikely if you're making money. All right. We're saying we're going to do our best to make sure you pay no more than you're legally required to. We're going to minimize your taxes. Start saving now. Make quarterly payments. If nothing else, put money in a savings account. When I tell a business owner if they have $1 million in gross receipts, they owe $50,000 at the end. They're basically paying 5%. So what I do at the end of every week, I changed it to every 2 weeks when I do payroll. I take a percentage from what I collected the 2 weeks before, and I put it into a tax account so that I don't spend it. If you're a W-2 employee, you're going to get a W-2, and if you made $1,000, you're going to get 800. Problem when you're a business owner or even own rental, that you get the whole 1,000. It's up to you to keep the 200 somewhere if that's what you have to come up with. All right. So that's where we're at. Smart business owners finally get a basic understanding of the income tax law. If you ever gone to a hockey game, I'm a big hockey fan, grew up in Massachusetts. Taking people that don't know hockey to games before, they don't know the rules, they're totally lost. Yeah, they get excited about the crowd and what's going on, but they quickly become bored. You have to have a basic understanding of the game to really enjoy it. Now, I played hockey when I was a kid. I follow it. I know the rules pretty well, but I have no misconception that I have a knowledge necessary to be a coach. That takes a deeper level of understanding far beyond what the average fan has. It's the same with tax business owners and taxes. We don't want you to be an experienced tax preparer, and you shouldn't kid yourself you are. I mean, just because you look something up on Google doesn't mean it's right. This tax law is very complicated and has many, many exceptions to anything you read. And I can tell you, I look some things up on Google. I know who I'm looking for. I'm looking for the people that I know their stuff. Okay. And then I look and tell whether it's a basic, just a surface look, or are they diving deep? All right. I've been doing this well over 40 years, and even after thousands and thousands of tax returns for hundreds of different industries, I still get challenged from time to time. So I don't know why business owners think they can do it themselves. It's a chore for me to just stay current, much less ahead of the curve, which is almost impossible nowadays. So we're not trying to do that, but you need to have a basic understanding of how it works and structure your business accordingly. You have to know two things: what information you want from your tax preparer and what information you should be able to provide. Okay. Understand, I'm not trying to make you an expert when we do tax planning, but it starts to educate you on what's there. And I've noticed the people that do tax planning with me call me with much more intelligent questions ahead of time because they know that's important. Okay. I think I got everything covered that I meant to. Let's see. Did I? Yep. And it ran a little long, but this is kind of important. This is when you do it. So steps to solving the problem. All right. Good news. You have time. All right. It's not too late. I mean, literally I've met with people a week before, right after Christmas, in between Christmas and New Year's, and saved them 500,000. Okay. Or saved them 40,000. So you have time. Call your tax preparer. Understand, if they're not swamped right now, they're not really doing tax planning. All right. They should be able to help you still. All right. You want to find a firm that specializes in this, or focuses is a more accurate term, on tax planning. Call us if you want. I mean, I have a few spots open, not many. All right. And start planning before year end. If you don't get it done before year end, if your tax preparer is not willing to do it, watch the next 3 videos. Okay. First, rewatch this video so you get a feel for it. Then the next 3 weeks, I'm going to be covering specific topics and specific year-end tax strategies for business owners, real estate investment, and everybody else. Everybody that has to file an individual tax return. All right. So this is the first in a series, and we're going to do business owners next week, which if you own a business, you don't want to miss. All right. And then if you have real estate, the week after, and then everybody else. Hey, thanks so much for listening. I'll see you next week with another profit maximizing tip. I already told you what it's going to be. And let's keep working to make this next 12 months our most profitable year ever. Thank you very much. Have a great day. Bye-bye.